Hi, it's Andy Hoffman, Media Director of Miles Franklin Precious Metals. It's Friday midday on what is looking to be a very calamitous ending to the week. In fact, yesterday I wrote this week may one day be looked at as a key inflection point in financial history, in that the ramifications of 2008's worldwide crisis may finally be coming home to roost, after having been masked by unprecedented money printing, market manipulation, and propaganda for the past 5 years. This morning's article was titled, "The Financial Cancer is No Longer Dormant, and Likely No Truer Words Will Ever Be Uttered." Let's start with the rapidly spreading realization that not only is the U.S. economy rapidly contracting, in large part due to the minuscule increase in interest rates caused by last year's ridiculous propagandized taper talk, but the entire global economy as well. Even China, the so-called world's growth engine, reported a sub-50 PMI reading on Thursday, indicating recession. And apparently the implosion of its $23 trillion shadow banking industry may well commence in the coming weeks. Look, the Chinese government may have done a lot of right things in recent years, like exploit their labor advantage, their labor cost advantage to bring all those jobs over there, and of course using their currency reserves to buy gold, silver, and other items of real value. But they have also fostered the world's largest real estate and private lending bubbles, both of which are on the verge of collapsing. It's no surprise the Chinese stock market has been one of the world's worst performing in recent years. And, clearly it's saying something that's very, very ominous. Now, demonstrating just how weak the global economy has become, IBM continued a string of horrible U.S. corporate earnings this week. The collapse in general has been particularly obvious in retail, as by now it's quite clear this was definitely the worst holiday shopping season since the post-crisis environment in 2009. And remember, this is occurring amidst a so-called recovery that's been hyped by every Main Street media and Wall Street and Washington outlet. In IBM's case, it was international revenue collapse that caused the shortfall, which is even more ominous, particularly in light of China's recessionary economic data. Now, the icing on the cake was Thursday's news that even McDonald's experienced negative same-store sales. Where people go to save money when they're eating out. Well, guess what? In this kind of economic environment where people don't have jobs, and the ones they do don't pay the bills, even McDonald's is expensive to go to. Heck, they're getting rid of their dollar menu due to rising inflation, which of course the Fed says doesn't exist, as even fast food has become expensive. Right now we're seeing record prices in beef, chicken, and milk, among other things, just in the States. And gasoline prices at this time of year have never been higher. So, and of course Obamacare is starting up as well. And now that Janet Yellen is going to be taking over the Fed in 2 weeks, be prepared for the printing presses to pick up where Benny left off and potentially become a lot more intense. We truly believe that forget tapering, which really never happened in the first place. I think that QE is going to be accelerated sometime this year, and at some point it's going to cause a major, major currency event. As for the upcoming FOMC meeting on Wednesday, meaning a couple of days from now, why anyone believes the Fed would taper again is beyond me. I mean, you had that John Hilsenrath guy of the Wall Street Journal, who they call the Fed's mouthpiece, put out an article the other day saying, I think it was on Tuesday, yes, it was Tuesday, saying, yes, he thinks the Fed is going to taper again. Of course, he said that all throughout August and September about the September meeting. It was completely wrong. Frankly, I think that article was simply put out because they were trying to attack gold, and they had a nice little attack on Tuesday, and that's what they blamed on it. Absolutely ridiculous. Anyway, I don't think that anything's going to happen at this meeting, especially after that horrible December employment report, which pretty much has been followed up by miserable data across the board in nearly every category. And don't forget, Janet Yellen is taking over the Fed chairmanship on Friday, and the last thing that she wants to do is start out by creating a market crash, or at least or prolonging the one that's going on right now, especially when they claim to be so data dependent and the data has been miserable. Now remember, we wrote hear 2 weeks back that the Fed's QEing, meaning the amount of QE, the amount of money they were printing and monetizing treasury and mortgage bonds with, has probably been closer to 130 billion per month since May than the 85 billion that's purported, and certainly a lot more than the 75 billion they're claiming to be doing now. So, given what's going on in the world, in the financial markets right now, I don't think we have to worry about tapering anytime soon, and perhaps never again. In my opinion, the initial tapering announcement was done solely in a feeble attempt by Bernanke to save face. Remember, he's leaving office after 8 years, and in those 8 years, he pretty much took interest rates down to zero immediately and kept them there, quintupled the Fed's balance sheet in the process, and really accomplished nothing but dramatically increasing the U.S. debt, inflation, propping up insolvent banks at the expense of taxpayers, and significantly weakening the world's view of the once mighty United States. Essentially, he helped out the cronies, that run the Fed, the banks. That's who benefited from him. Everyone else did not. And remember, the Fed has exported so much inflation, that's what I was writing about today, that nearly every currency in the world has fallen against the Fed because of the inflation that they've exported over the last 2 years because of this money printing. So really, the entire world has suffered from what he's done. Oh, and by the way, I just learned that the 1.4 million people that supposedly had their long-term unemployment benefits terminated on December 28th didn't actually get the official notice until last week. And thus, last month's 550,000 person drop in the labor force had nothing to do with those 1.4 million people. And thus, the February 7th NFP report for January, if the BLS reports it correctly, should show an utter collapse of the labor participation rate, and potentially we could see the unemployment rate as reported fall below 6%. It was just 7% in November. It could be under 6% in January amidst weakening economic data, amidst this horrible retail season. Now do you see why the Fed replaced its 6.5% unemployment rate threshold for ending zero interest rate policy with an open-ended promise to maintain at least 3 more years? Which, by the way, the Bank of England replicated this week when it disavowed its own 7.0% ZERP termination threshold when the UK's own fraudulent unemployment rate dipped to 7.1%. FYI, the UK's cost of living has surged as much as any on the planet, as just as in the US, the real economy has stagnated, while BOE, or Bank of England, generated housing and equity bubbles have benefited the 1%. And again, the Bank of England doesn't have the reserve currency that the Fed does, so all of their money printing has an amplified effect on inflation, which is exactly what's going on in the UK right now. Here in America, Congress probably feels pretty smug about not extending the benefits for those 1.4 million people, and thus not giving back immediately the fictional back-end loaded $20 billion per year of spending cuts it engineered in its farcical budget deal a few months back. Except these 1.4 million people, and possibly an additional 3.6 million whose benefits expire throughout 2014, will be lining up for food stamps, disability welfare, and other entitlement programs that will cost even more money. And oh yeah, we learned yesterday that the government will exhaust its current round of extraordinary measures and thus run out of money by the end of February if the debt limit isn't immediately raised. Now, where are S&P, Moody's, and Fitch now when the U.S. credit ratings should be downgraded to junk? Oh, I know, they're cowering in the corner, as this week we learned that former Treasury Secretary Geithner actually threatened S&P if it downgraded the U.S. in August 2011, which it certainly followed up on thereafter by first forcing its CEO to resign and then suing S&P to the point where its very viability is now threatened. Of course, the rating agencies deserve everything they get for the role they played in fostering the 2008 financial crisis, and I recommend everyone read Matt Taibbi's amazing article in Rolling Stone about it. Except in this case, obviously S&P was in the right, and look what they suffered for it. And finally, the gold and silver action. Now, through Monday, meaning 6 days, we saw an incredible 6 days in a row of the identical chart pattern. That is, Gold and silver hit at their usual 2:15 a.m. Eastern Standard Time, which is the open of the London paper market, followed by a capped rebound in the morning. Very powerful. And that's when they put out, the cartel put out John Hilsenrath's article and just viciously attacked on Tuesday. Wednesday, same pattern as the prior 6 days. And then we came to Thursday, meaning yesterday. Now, obviously, everyone's listening knows gold went up about $27, 2% by the way, and silver pushed its way back over $20. Its line in the sand for the past year. Now, incredibly, Zero Hedge credited this surge with comments by India's opposition party about possibly getting rid of the onerous import tariffs and regulations that have caused a massive gold black market to develop, replete with surging physical premiums. This is ridiculous, as we have written of this topic for weeks now. This is nothing new. Clearly, the ruling Congress party, they're called the Congress Party, is desperate to avoid being swept out of office in the national elections upcoming in May, just as it was in last month's regional elections. It took just 4 months for their insane gold policies to be overrun by reality, meaning they jacked up the import tariffs to 10% in August, and all those import restrictions. And that's why we have this huge black market and why demand is surging. And by year end, I'd be shocked if Indian gold demand is not back to record levels, as those policies are either overturned or simply demolished by the black market. No, gold and silver are rising, such as what happened yesterday and earlier today, due to an historic confluence of bullish fundamental, technical, and sentimental factors. With only a desperate cartel preventing the massive price explosion we know is coming. And when I say desperate, I just can't believe what I'm watching. Today is just the incredible example of it as we watch this war going on, with gold right at the unchanged level and the Dow being held at 16,002, down 190 points. Anyway, on Thursday, so the PMs rose significantly. Silver broke through this line in the sand at $20, and gold through its own line in the sand at $12.50. Even 1260s, the low 1260s, which was a key technical level, and I say key technical level because really it's just where the cartel is putting up naked shorts, trying to get the black boxes to sell. Remember, the 50-day moving average for gold is 1261, and silver it's $20. So they're right there trying to fight this to the death. And by the end of the day, gold was up exactly its 2.0% limit up that the cartel typically imposes, and silver was exactly $20, and the Dow was down exactly 1.0%, which for years I've called the ultimate PPT limit down. So yes, they maintained some control, but clearly, their main rule of what I call PPT rule number 1, thou shalt not allow PMs to surge whilst the Dow plunges, was violated, and it was in danger of being violated again this morning. In fact, right now the Dow is down 200, gold is up 20 cents, and silver is down 15 cents. Earlier this morning, gold was up $8 or $9, and silver up 10 or 15 cents. But they are just so determined to prevent this from happening that this is literally a war. I mean, this is the war to prevent people from fleeing paper assets and into real assets, which ultimately they will. And thus silver is just under $20 again. It's just incredible to watch. They will lose, that's for sure. It's just a matter of when. Look, economic Mother Nature cannot be held back forever. And that's what they attempted in 2008 through 2013, frankly, with all that money printing. But ultimately, the system is doomed, as all previous fiat systems before it. And, John Williams at Shadow Stats actually predicts hyperinflation this year, which we are seeing in multiple currencies already. It's only January 22nd. I mean, we've talked about the Fragile Five countries where 25% of the world's population lives. That's South Africa, Turkey, Indonesia, India, and Brazil. I mean, those Fragile Five currencies were decimated last year. They're seeing huge inflation. And we here predicted at Miles Franklin just 3 weeks ago in our year-end predictions that the dollar would dramatically rise against these kind of currencies again, because they're the low-hanging fruit, the countries that can't mask their inflation by exporting it to others. And that's exactly what's happening. I mean, we are seeing right now the Brazilian real, the Turkish lira, and the South African rand collapse to multi-year and in some cases record low levels. And ironically, as their stock markets are near highs, showing that the symptoms of hyperinflation are there. In Venezuela and Argentina, we are seeing all-out currency collapses right now. These are not immaterial. This is how a lack of confidence spreads around the world. I mean, it will happen, and it possibly will happen right now. So let me just go to the final topic of the day, and that would be the COMEX. People have forgotten about it temporarily, but they shouldn't. We are down to 370,000 ounces of registered inventory. That's worth, a couple of $100 million. It's nothing. More importantly, there's still 125,000 ounces from the December contract which have not been settled on. In my eyes, that's a default. Some people may not call it that, but here we are 3 weeks later, and they're still not delivered. And even if they're not delivered, we're down to 370,000 measly ounces supporting this Ponzi scheme of paper. And don't forget, last year, February was an even bigger delivery month than December. December typically is bigger, but not last year. Last year, an incredible 1.3 million ounces were delivered in the February contract. Remember, there's only 300,000 or so ounces of registered inventory now. And as we move, we're just 2 weeks away or so from the first delivery day for the February contract, which should settle at the end of February. And there's still 13 million ounces worth of open interest. Now, a lot of that will roll over as usual. But if we come even close, if only a fifth of last year's total is delivered, there's no inventory there. There's no inventory has come in the entire year. So, something is going to give at the COMEX this year. There's just no doubt in my mind that something is going to give there. And if not there, in one of the other paper exchanges. Look at the LBMA. We learned this week that Deutsche Bank is withdrawing. They're withdrawing from the London FIX under allegations of manipulation. BaFin, which is the German equivalent of the SEC and CFTC combined, said precious metals manipulation is worse than LIBOR rigging. Worse than LIBOR rigging, which was the name of my article yesterday. I mean, this is a significant announcement from a first world nation. This is becoming mainstream right now. The whole world is finally starting to understand what's going on in the precious metals markets. And it won't be long before the entire world understands that the reason it's held down is to support this dying fiat currency system. There's very little inventory out there. And if you haven't bought the ounces, forget the price, if you haven't acquired your ounces, when the game ends and everyone wants them, you probably will never get them again. Hopefully this helps. I hope you have a great weekend.